Welcome to this video on understanding your credit report. In this video, we will be discussing what a credit report is, why it is important, and how you can obtain a copy of your credit report. Your credit report is a detailed summary of your credit history, including your credit accounts, payment history, and outstanding debts. It is used by lenders, landlords, and other financial institutions to determine your creditworthiness and ability to repay loans. Having a good credit report is essential for obtaining loans, credit cards, and even renting an apartment. It can also affect your ability to get a job or insurance. Therefore, it is important to understand what is on your credit report and how to maintain a good credit score. To obtain a copy of your credit report, you can request it from one of the three major credit reporting agencies, Equifax, Experian, or TransUnion. You are entitled to one free credit report per year from each agency, which you can obtain by visiting annualcreditreport.com. In the next segment, we will discuss the different sections of your credit report and what information is included in each section. Your credit report is divided into several sections, each containing important information about your credit history. Understanding these sections can help you identify any errors or negative information that may be affecting your credit score. The first section of your credit report is your personal information. This includes your name, address, date of birth, and social security number. It is important to review this section carefully to ensure that all of the information is accurate. The second section is your credit accounts. This includes all of your credit cards, loans, and other credit accounts. Each account will have information on the creditor, the account number, the date the account was opened, the credit limit or loan amount, and the current balance. The third section is your payment history. This section shows whether you have made due payments on time or if you have been late or missed payments. Late payments can have a negative impact on your credit score, so it is important to make all of your payments on time. The fourth section is your public records. This includes any bankruptcies, foreclosures, or judgments against you. These negative marks can stay on your credit report for up to 7 years and can have a significant impact on your credit score. The fifth section is your inquiries. This shows who has requested a copy of your credit report. Too many inquiries can also have a negative impact on your credit score, so it is important to only apply for credit when necessary. In the next segment, we will discuss how to read and interpret your credit report. Now that you understand the different sections of your credit report, it is important to know how to read and interpret the information. Your credit report may seem overwhelming at first, but with a little guidance, you can easily understand what it means. First, review your personal information to ensure that it is accurate. If you notice any errors, contact the credit reporting agency to have them corrected. Next, review your credit accounts and payment history. Look for any late payments or accounts that have been sent to collections. If you notice any errors or discrepancies, contact the creditor to have them corrected. It is also important to review your public records section to ensure that any negative marks are accurate. If you have filed for bankruptcy or had a foreclosure, these will stay on your credit report for up to 7 years. Finally, review your inquiry section to ensure that only authorized parties have requested your credit report. Too many inquiries can have a negative impact on your credit score. If you notice any errors or negative information on your credit report, it is important to take action to correct them. This may involve contacting the creditor or credit reporting agency to dispute the information. In the next segment, we will discuss how to improve your credit score. Maintaining a good credit score is essential for obtaining loans, credit cards, and even renting an apartment. If you have negative marks on your credit report, there are steps you can take to improve your credit score. First, make all of your payments on time. Late payments can have a negative impact on your credit score, so it is important to pay your bills on time each month. Next, pay down your outstanding debts. High levels of debt can also have a negative impact on your credit score. Focus on paying off your debts, starting with the accounts with the highest interest rates. It is also important to keep your credit utilization low. This means not using all of your available credit. Aim to keep your credit utilization below 30% of your available credit. Finally, avoid opening too many new credit accounts at once. Each time you apply for credit, it can have a negative impact on your credit score. Only apply for credit when necessary. Improving your credit score takes time and effort, but it is worth it in the long run. A good credit score can save you money on interest rates and help you achieve your financial goals. In the final segment, we will summarize what we have learned about understanding your credit report. In this video, we have discussed what a credit report is, why it is important, and how to obtain a copy of your credit report. We have also reviewed the different sections of your credit report and how to read and interpret the information. Additionally, we have discussed how to improve your credit score by making payments on time, paying down your debts, keeping your credit utilization low, and avoiding opening too many new credit accounts. Remember, maintaining a good credit score is essential for achieving your financial goals. By understanding your credit report and taking steps to improve your credit score, you can take control of your financial future. Thank you for watching this video on understanding your credit report.